All right, working on exercise 2.5. Let's take a look at it. We need to show each transaction in the accounting equation, and then at the end we'll have our totals, so we will be able to figure out our balance sheet. So number one is John Adams started the business with a cash investment of $60,000. Every number has to be recorded twice. This is called double entry accounting, and it's the way we can double check our work. So we will add our $60,000 in cash. And that will be our owner's equity is the second entry. Okay, notice I put a big red line down between the equal signs. So we're separating assets and liabilities and owner's equity. Okay, the second transaction is we purchased equipment for $22,000 on credit. We purchased equipment on credit. So we know we got the equipment, that's our asset, $22,000. And we're paying for it later. So that's an accounts payable. Oops, $22,000. And those are both adding to. The last ones we're also adding to. Okay, the third transaction is we performed services for $3,100 in cash. So we added $3,100 and we added revenue. Okay. Number 4, we purchased additional equipment for $4,600 and in cash. So we're subtracting $4,600, but we added equipment, so that stays in the assets. $4,600. Number 5, we performed services for $5,050 on credit. So we gained the revenue. Let's start with the revenue. So we gained $5,050 in revenue, and our customer owes us that money because we performed the services and didn't get cash. So we are also adding $5,050 to accounts receivable. Number 6, we paid salaries of $4,450 to employees. Easy, we're using cash for that. We paid salaries, so $4,450. That is called salaries expense, so it's an expense. And we are $4,450. Now, we subtract expenses in the end, but while we are accumulating expenses, they would be added together. In this particular problem, there's only one expense, so we're not going to have to worry about that, but that's something we'll discuss further as we get into chapter 3. We add expenses together and then we subtract them from the revenue. All right, number 7 is we received $3,200 in cash from charge account customers. So we received $3,200 in cash from charge account customers who originally paid with accounts receivable. So that account will be reduced by $3,200. And then number 8, we paid $1,300 to a creditor on account. We paid, so that's minus $13,000. And a creditor means that we had a liability with that company, so we are also decreasing our liability by $13,000. Okay, that's the end of our transactions, now we're going to add up the columns, or add, subtract the columns and get totals, and check and see if our accounting equation is correct. Okay, to finish up here with exercise 2.5, adding our cash, starting with 60,000 plus 3,100 minus 4,600 minus 4,450 plus 3,200 minus 13,000, we should come up with 44,250. 44,250. With our accounts receivable, we've got 55,050 minus 3,200, leaving us with 1,850. And our equipment, adding together 22,000 and 4,600, we get 26,600. Accounts payable, 22,000 minus 13,000 gives us 9,000. Capital stays the same until we run our reports at the end of the month. Revenue, 3,100 plus 50,050. 8,150, and again the one expense 44,450. Okay, now to double check that our work is correct, if you add together all of the assets, you should get, oh, I didn't write this down already. Add together all the assets. So adding together the cash, the accounts receivable, and equipment, you should come up with 72,700. And then when you add together the liabilities, 9,000 plus capital, 60,000 plus revenue, 8,150, subtract expenses, 4,450, you should come up with 72,700. That's how you check to make sure your accounting equation is in balance. Okay, end of exercise 2.5.